There's a quiet wealth shift happening right now. Northern money is heading south. And I'm not talking about a few flips or scattered investments. I'm talking about institutional players, private equity, family offices, all turning their attention to the Carolinas and the Southeast. Charlotte, Raleigh, Atlanta, Greenville. If you've been sleeping on these markets, this is your wake-up call. Let's dive into what's happening, why it matters, and what it means for everyday investors like you. Chapter 1. The North to South capital migration. For decades, places like New York, Boston, and San Francisco were seen as real estate's crown jewels. High rents, high appreciation, big city prestige. But the tide is turning. Today, smart investors are chasing net cash flow, not just vanity zip codes. They want growth markets, landlord-friendly regulations, and better returns. That's led to a major trend, the migration of investment capital out of the Northeast and into the Southeast. Why? Because markets like Charlotte and Raleigh are no longer up and coming. They've arrived. A real-world example. Spruce Capital comes to Charlotte. Let's put this in perspective with a real deal. Spruce Capital Partners, out of New York, just made their first acquisition in the Charlotte market. Their affiliate, Spruce Properties, bought a 300-unit apartment complex called Evolve at Parkway for $68.75 million, built in 2023, 98% leased, 1, 2, and 3-bedroom layouts. Positioned near the Charlotte Motor Speedway, this isn't some fixer-upper, this is a Class A, institution-grade multifamily deal. And this move isn't random. Spruce said it themselves. This acquisition marks the start of a long-term strategic shift. They're pivoting out of the Midwest and leaning into markets with better population growth, strong employment hubs, and deep institutional demand. Charlotte and Raleigh, top of their list. Chapter 3. What's driving the southern surge? So what exactly is pulling all this money south? It comes down to 3 key forces. First, population growth. The Southeast is exploding. Charlotte is gaining over 100 people a day. Atlanta's metro is projected to grow by over 2 million people by 2040. People are leaving high-cost states and heading for opportunity. Second, job creation. These aren't just people moving for weather, they're moving for work. Banking in Charlotte, tech in Raleigh, logistics in Savannah, manufacturing in Greenville, and when jobs move in, housing demand follows. Third, investment yields. Try buying a 4-cap in Manhattan and making it cash flow. Now compare that to a 6-cap deal in Charlotte where rents are still climbing. The math just hits different down here. Chapter 4. The institutional signal. Here's the part most people miss. When large institutional investors shift markets, they're not guessing, they're acting on data. They have analysts, heat maps, migration tracking, and rent growth forecasting dialed in. So when Spruce or any major group makes a move like this, best believe it's a signal. They're not waiting for media headlines. They're creating the trends before the public even knows what's happening. For everyday investors, this is your chance to ride the same wave, just earlier and with smaller bets. Chapter 5. Charlotte is the epicenter. Let's talk specifically about Charlotte. This market is uniquely positioned. It's a major banking hub, home to Bank of America and the East Coast operations of Wells Fargo. It's got world-class healthcare systems, universities, pro sports, and a growing tech scene. And then there's the geographic advantage. You're within a few hours of the mountains, the coast, Atlanta, Raleigh, and DC. It's a magnet for both businesses and transplants. That's why developers have planted roots here and why their properties are being bought for nearly $70 million by northern firms. Chapter 6. Multifamily is leading the charge of all the asset types in commercial real estate. Multifamily is still the king, especially Class B and C properties. Why? Because Class A may look sexy on paper, but it's expensive to build and operate. Meanwhile, Class B and C buildings serve the workforce housing sector, where demand never really fades. Add to that high barriers to entry for new construction, increasing interest in suburban layouts, and record low vacancy rates in the Southeast. It's no surprise investors are fighting for existing assets. Chapter 7. Not just multifamily. Industrial is heating up. Now, let's not forget industrial real estate. With the boom in e-commerce, last-mile logistics, and regional warehousing, markets like Charlotte, Atlanta, and Columbia, South Carolina are becoming hubs for industrial development. Vacancy rates are tight, rents are climbing, and investor interest is following fast. If you're looking to diversify your portfolio beyond residential or multifamily, small bay industrial could be your next smart move. Chapter 8. What out-of-town investors are flooding. And what used to be local has gone national. I talk to investors every week from New York, LA, Chicago, even Canada, all asking about Charlotte, all looking for guidance on where to buy, and all trying to get in before it becomes too competitive. That's the moment we're in. We're still early, especially in secondary markets like Concord, Mooresville, or Gastonia, but it won't stay this way forever. Chapter 9. What this means for first-time investors. Now you might be thinking, I'm not buying $68 million apartment buildings, and that's fine. Most investors aren't, but you can invest in duplexes or quads in high-demand corridors, smaller multifamily and transitioning neighborhoods, mixed-use buildings on emerging commercial strips. What matters isn't how big you go, it's how smart you move. And right now, smart means getting into appreciating markets while the door is still open. How to move strategically. Let's break this into an action plan. Step 1. Understand your budget. Are you coming in with $100,000, $500,000, or partnering with others? Step 2. Choose your path. Are you going residential with 1 to 4 units, or commercial with 5+ doors, mixed use, or light industrial? Step 3. Pick the right market segment. In Charlotte, that might mean looking at Concord for affordability, South End for higher rent potential, or Gastonia for upside. Step 4. Work with someone who understands the cycles. Not every deal is a good one just because it's in the South. You need the right analysis and the right eyes on the ground. Chapter 11. The window of opportunity. All this brings us to one thing: timing. You don't need to chase trends, but you do need to recognize momentum. Northern money is moving, southern cities are growing, and the smart money is positioning now. The question is, will you wait until prices catch up, or will you act while the window is still open? The bottom line is this: a quiet shift is happening. Capital is moving. Foundations are being laid. The South is no longer second tier, it's the new frontier. And whether you're buying your first quadplex or eyeing a 50 unit, the opportunity is here for those paying attention. Don't just watch others build legacies. Take your seat at the table. Make your next move your best move, because the future favors the informed. Ready for more? Let's talk. And remember, the bag is out there. You just have to move different to catch it.